This is the Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoyed this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today I'm here with Praveen Varshney of Varshney Capital. Praveen, thank you for joining us.
Wonderful to be here. Thank you for the time, Hall.
Can you tell us how you got into venture capital in the beginning?
Yeah, no, so I hadn't planned to get into venture capital. It was a bit of an accidental, serendipitous path that got me here. I'm actually a CPA by profession, so I did 5 years, a big accounting firm called KPMG. And then when I left there, I joined a family office. I work with my father, who's also a CPA, and my younger brother, who's a lawyer. And we kind of had a 10-year run as entrepreneurs. So we built a handful of companies, sold them, took them public, all that good fun stuff, created a capital base that then ended up turning into a family/venture capital office. So I get people who ask me sometimes, how do you become a venture capitalist? And I said, well, one way is you become an entrepreneur, people invest in your company and you make a lot of money, and then you've got the money to become a venture capitalist, or you end up being asked by the venture capital firm that invested in you and had success to join them. So going the entrepreneurship path is sometimes a good way to get into the industry.
Tell me more about Varshney Capital. What does your group invest in and how does it work?
For sure. So, we're hardcore entrepreneurs. We love entrepreneurship and supporting the system, building the ecosystem. We actually have 3 broad areas we work in. We're more generalists as opposed to specialists. So in Canada, we've got a very active mining resource hub. So we've worked in the mining resource sector for a number of years. Second sector is real estate. We've been very active doing developments and buying cash flow properties in markets like Texas and Phoenix, where we have a lot of apartment buildings. But the third bucket, my favorite bucket probably, is primarily social impact investing. So businesses that have a phenomenal purpose behind them, their why, and they're hopefully doing something great for the planet or people, or hopefully both, as opposed to just something to make money.
Now, you're a venture capital fund, but you're also a family office. And how does that work?
Yeah, so we've got family resources. So when we see an opportunity that we want to invest in, then we're usually the lead investor. And then because a lot of it's earlier stage, it's more like venture capital. But we have a very significant Rolodex of contacts around the world that like to co-invest with us. So depending on the nature of the project and how much money is required, basically determines who will literally just phone or email. And it's quite a responsibility. I remember when I was first getting into the industry, explaining to my wife, and I'm like, yeah, we phone people or email people around the world and money shows up, and sometimes it's not even a lawyer's trust account. There's a lot of trust needed there and responsibility to have high integrity when you're working that way.
So when you're looking at a group of deals to potentially invest in, what are the key things you're looking for that says, I want to learn more about this deal and follow it up versus it's not for me? What was your criteria?
Yeah, so I mentioned social impact, and it wasn't always that way. So one of the very first companies we started as entrepreneurs was a casino company. So gambling, poker, slot machines. We pretty much helped set up all the casinos, Indian casinos in California. And I was in my late 20s, and it was a lot of fun, and we did really well. But wind the clock forward a number of years, when my daughter had just been born, we worked with a solar company in Canada and built it into Canada's largest solar company. And I remember thinking, wow, this is amazing. We're doing something good for the planet and her future and other kids' futures. And we're making a lot of money for investors and ourselves. So it was kind of the accidental serendipitous start to social impact investing before probably it was even a word. And so it starts with the why, right? So hopefully the business is doing something, as said earlier, amazing for the planet or people, hopefully both. And then after that, one of the big things I find is, to use a poker term, it's table stakes to expect the entrepreneur to be hardworking, driven, smart, all that kind of stuff. But kind of X factors are vision and passion. That's what really gets us excited to want to buy into somebody's dream and help them turn it into reality. So vision and passion. A second thing is we like things that have global scope to them. So something that's scalable, that's not just a localized, regionalized business. And so it's about making as big of an impact as possible. Another thing, it doesn't always happen this way, but is we like to see recurring revenue. And going back to my entrepreneur phase, when I was running companies and I had some businesses where we didn't really have recurring revenue, it's such a slog because you can get a pretty good handle on your costs, but revenues was just like throwing darts, and it's just hard to plan for payroll and things like that. So recurring revenue, that razor blade model where I'll give you the razor for free as long as you keep buying my razor blade. So something consumable, subscription based. Food is nice because you got to eat every day. So the recurring revenue are two of my favorite words in the English language. There's a bunch of other factors, but those are some of the top ones on the list.
Social impact investing covers a lot of different areas. Are there particular sectors you're interested in, or what's your criteria to be a social impact? Does it have to be triple bottom line, or what is your criteria there?
Yeah, it's interesting. Great question. For us, it's more of, if you took a bunch of people in a room and described the business to them, would they all agree that it's social impact, right? And so organic, healthy food is an industry that we have a number of investments in. Unfortunately, in North America, there's so much ill health, and a lot of it's because of the processed food, with the chemicals and stuff like that. Another sector for us is clean energy. So I mentioned a solar company. That was a fun ride building that company in Canada to its largest solar company. Personally, I've been on a mission to get rid of excess waste and plastic. So we have several ventures that are focused on that. One of them here in Canada is called GPAC. And what we have is the world's first biodegradable, compostable, single-serve coffee pod, POD, to help replace Keurig and Nespresso's plastic pods. And the bigger vision with that company is anything convenience food packaging that could use that. So ketchup, peanut butter, jam, margarine, creamer, ramen noodle boxes, all in throwaway plastic things. Another really, really exciting company here in Canada that we invested in is called Pond, P-O-N-D, Pond Technologies. And they basically have a founder who's a light photonics expert who's created a way to create algae out of gases, like toxic gases. So they would drill a hole in a smokestack near a factory, redirect all that SOx and NOx into these tanks, and grow algae, which is used to make nutraceuticals, so food for humans or food for animals. So we just think about the concept of no more greenhouse gases, and you're taking it and putting it into these tanks to grow food. Like, it's just unbelievable. One last example, it's called Ronin 8, R-O-N-I-N, and then number 8. It's basically a company here that deals with electronic waste, e-waste, which is a massive growing global problem. And so a lot of that is incinerated, which is bad for the environment, or dumped in the oceans, which are unfortunately so screwed up with chemical mercury and plastic and all the gyres. Or some of it is shipped to countries like Ghana and India and China, where little kids, really young, their job is to take it apart to get at some of the precious metals in there. But unfortunately, there's caustic corrosive chemicals as well, so they're getting sick, they're dying. So what we do through this closed loop system is literally one end dump in old cell phones, motherboards, solar panels as a growing form of feedstock, and everything gets separated, including the plastic. And the most important thing, most valuable thing that comes out of it is the precious metals, gold, silver, palladium, rare earths. So that one really combines our interest in mining and technology and social impact. It's kind of like a trifecta, but just another really exciting company.
Sounds like a great company. My experience with social impact is that while not in all cases, but in many cases, you're trading off a financial return for a social return. How far will you go in doing that kind of trade-off?
Yeah, so what we've seen is with these companies that we mentioned, because they're solving such massive global problems and they're platform technologies that can be used anywhere in the world, we don't really think we're sacrificing return at all. Like, these companies all have high margins, amazing proprietary technology, global growth prospects. So I don't necessarily agree that by thinking of social impact that you're going to necessarily sacrifice return. So yeah, that's our experience so far.
So you hold both equal. It has to have a social impact and has an equivalent financial impact. You don't go through a trade-off in that case, because I see a lot of deals where they offer that, and in some cases investors take it, in some cases they don't. And that is kind of the heartburn behind some social impact investing, is that the financial return was not there as in non-social impact investing. But it seems like nonprofits are giving way to the impact investing world, and I see many people moving into this space. Where do you think social impact investing is going? What's the next stage of development for it?
Yeah, so it's not a fad or like a trend. To me, it's a growing tsunami. I'm seeing a lot more people all around the world realizing that unfortunately, we've sacrificed too much by, focusing on profit at the expense of people of the planet. And I'm not sure if you're familiar with the book, The Lorax by Dr. Seuss, but, I love the book. The movie was great. And we're at risk of becoming the Lorax, like where everybody's so busy consuming, and you look up and all of a sudden everything around you is like dead. And so it's not just from the investment side, but I'm finding a lot of the youth and the millennials, they are almost demanding places to work where it's social impact. I had the opportunity to speak at a university social impact conference here a couple of years ago as a keynote, and it was their initial social impact conference. But I remember congratulating all the kids. I said, this is so amazing that you 18, 19, 20-year-olds, you're so dialed in. You've already figured out that you spend so much of your day around work that you just want to show up somewhere for a paycheck. You want to do something meaningful, work for a company that's doing something amazing. So you've got this trend from the bottom up as well. And there's organizations like Tonic, TONIIC.com, which we're members of, helped start it here in Canada. But it's basically a global group of impact investors. And when we came across them a couple of years ago, I couldn't believe it. I'm like, oh my God, these are my peeps. I'm looking for people like this all around the world that all they want to do is invest in amazing companies. So I think, as I said, it's a huge global growing tsunami wave, and more people are realizing that they have to move in this direction because it's the best thing for society, but also people are demanding it.
Well, I see a growing number of funds and venture capital firms and offices going after the social impact space, and it seems like it's starting to come into just about every sector that's out there in one way or another. So it's great to see that it's growing and expanding, and it's certainly being driven forward by the millennials that are coming up as well. But I also understand in Canada you have a model called the public venture capital market, and was curious to learn more about how that works. That's something we don't have in the U.S., but it sounds like it's serving you well there.
For sure, Hal. Yeah, no, definitely. It's something that we don't think is available in many countries around the world or any other countries around the world. But basically, so PVC, public venture capital, what that means is we have a very active stock market here for early stage junior companies to get listed and financed. So there's TSX Venture Exchange and another exchange called the CSE. And I've been doing this now for 25 years. And a lot of the companies that we finance is more primarily for, like, I'd call it a Series A round. So a company's already got some traction in revenues. So it's de-risked. It's not development phase anymore. And they want to raise some growth, execution, marketing risk capital. We can take companies that are doing $1 million, $2 million, $5 million in revenues, which is really small from a US perspective, public here. And you've got, pros and cons of staying private versus public. I won't bother getting into it here, but we found that there's enough pros if it's the right type of company and opportunity to access capital this way. And numerous examples I can walk through where we've done a first round going public and then 2 or 3 follow-on rounds for further growth. And what we find too is whether you're a pure private company or public in our model, the best exit is still a strategic sale. So we want to try and reverse engineer to make that happen. And in terms of fundraising for private companies, a lot of them can hit a wall through the network, and not every company is VC-able. And also, you learn from experience that VC term sheets, they're not the be-all and end-all because they can have a lot of terms, anti-dilution rights, liquidation preferences, things like that can end up really biting the entrepreneur in the ass. And so our public venture capital model is a great opportunity for people to look at as an alternative to continue to raise growth capital.
Well, it sounds like it's a great opportunity to bring a company to that Series A or Series B level funding, and then from there they can gain private equity and other kinds of funding to grow forward or sell the business to another company. So it sounds like it's a good stepping stone to the next stage. So it looks like it's working well for you guys.
Yeah, no, definitely. And there's people interested in exploring that. I'm on LinkedIn, and feel free to message me, and I can also put you in touch directly with people at one of the exchanges there to talk to learn more. But yeah, it's one of the big things though too is it's got to be a growth story, because if you're a localized, regionalized business, even if you had 100% of your market share, there'd be no interest in your stock. And that's when, the negative stuff kicks in because you've got no liquidity. It's hard to raise money. You still got all the costs. You're wondering why you went public. You're thinking about, how can I privatize? So it works best when you've got a global growth opportunity story.
So that sounds great. In the last minute or two that we have here, what else should we cover that we haven't done so far?
Let me see. For entrepreneurs, I have a lot of respect and mutual admiration for them. It's hard work, but they're the ones changing the world. I've been a member of EO International, which is, EOnetwork.org. It's the largest group of entrepreneurs in the world. I'd encourage people to look at associations and organizations like that to find fellow entrepreneurs to learn from and accelerate their learning curve. Just good luck and wish everyone all the best.
So what's the best way for people to reach you? Is it LinkedIn or website?
Yeah, so our website is Varshney Capital, which is my last name, VARSHNEY, and then capital, all one word.com. Or LinkedIn is another good way. Quite active on that. I'm using social media. I blog a lot about entrepreneurship and social impact.
Well, that's great. Well, I appreciate you taking time and hope to have you back for a follow-on discussion. I'd like to see how these portfolio companies are working out and see where social impact investing is taking us. But thank you so much for taking time.
My pleasure, Hal. Thank you very much for the opportunity.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.